There are only three real paths to take when purchasing a home and getting a mortgage. And by path, I mean like options for what type of loan you're going to be doing. Is it a primary home that you live in? Is it a second home or an investment property? So it can get a little fuzzy and a little gray on the investment property and second home. I'll explain that in a minute, but that's it. Like the mortgage applications, there's a drop down with three options, and that is it. It's either your homestead property where you will own, occupy, and live in the home. It's a second home, one like think of it like a lake house or a mountain home or something like that, a second home, or it's an investment property purchased with the intent of making money. So it's funny, pre-COVID, second homes were treated more like primary homes, like that lake house was treated, from an underwriting standpoint, a rate standpoint, guideline standpoint. They had a lot more just flexibility and they were treated more like a primary. Well, as soon as COVID hit and Airbnb and Verbo and short-term rentals became a thing and just exploded, at that point, second homes suddenly got treated more like investment properties because you can have that lake house and still rent it out like an investment property. So the it's kind of now like, yes, it's a second home and you can declare it a second home, but it's going to have a lot of the cost, meaning higher rate, a lot of the fees, a lot of just underwriting guidelines are going to mirror more that of investment properties because the underwriting side, the mortgage world is basically understood like second homes. It's becoming few and far between where they're true just second homes versus, Airbnbs and VRBOs and things like that. So those are your only three options. Do you live in it? Yes. Primary home. And by the way, when you buy a primary property, just as a side note, you're signing most loans. The notes when you close and sign, it says you will live in that home for 12 months, at least 12 months. So don't think you can go buy a primary home, turn around, turn it to an investment property 6 months later, or 30 days, 90 days later. That is mortgage fraud. Fraud is a bad F word in the mortgage industry, is fraud. So do not do that. If you're going to buy a home as a primary home, please live there for the 12 months that you said you would. And there are things like life happens, divorce, job relocation, things like that. So if they find out and they come after you, you can at least show that there's a third party or something beyond your control that made you do it. So I don't want you to get like totally paranoid about it, but certainly do it with good intentions and make sure you can back up your story if something does happen. Beyond that, second homes, investment properties, higher rates, bigger down payment needs. Check all that out as far as what down payments are. I'll put a link somewhere around here about down payments and how to work through that. But if you have questions about it, give me a shout. But fundamentally, there's about three options you can do as far as the type of occupancy that you're going to buy or refinance when doing a home loan. So reach out to the Mortgage Mark team if you have any questions. We're certainly here to help. And as always, when you think mortgage, think Mark.